Leading up to the 2017 bull market top, Bitcoin saw a 10,000% rally in a period of 2 years. During that run-up, there were 4 distinct stages where Bitcoin consolidated, as we can see here, with the last of those stages ending in September of 2017. Right after, Bitcoin entered its steepest ascent of the entire cycle, gaining 500% in just 3 months before the bull run finally peaked. Now, if we look at today's bull market that began in late 2022, the structure looks arguably similar. Once again, we've seen 4 major consolidation stages, with Bitcoin now pressing against the top of its 4th stage in the month of September. If Bitcoin were to follow a similar blueprint as 2017, then it would suggest that we're about to see the most aggressive part of this bull market heading into the end of 2025. In fact, big players are already positioning in anticipation of that kind of a move. This chart shows us the total Bitcoin held by treasury companies, which are businesses that hold Bitcoin directly on their balance sheet as part of their investment strategy. At the beginning of 2025, these companies collectively held around 300,000 coins. Today, that number has jumped to 1 million tokens, accounting for almost 5% of Bitcoin's total supply. So in just the last 9 months, these corporations have increased their Bitcoin holdings by more than 3 times. But we have to also consider that there's a risk that today's setup isn't actually as bullish as it looks. If we go back to 2021, we saw almost the exact same sequence play out as today. In both instances, Bitcoin saw a sharp rally, then got hit with a violent correction, only to bounce back with a V-shaped recovery. Back then, many believed that the worst was behind us and the bull market was back on. But that recovery proved to be a trap as price rolled over and entered into a 75% bear market. Just last week, we saw the largest crypto market liquidation throughout 2025. And if today's trajectory ends up following a similar path to 2021, then it could make the recent liquidation look like child's play as Bitcoin enters another major downturn. In fact, if we look at what long-term Bitcoin holders are doing today, the signal is starting to look concerning. Since the start of 2024, they've booked profits on a total of 3.27 million Bitcoin, worth over $375 billion at today's price. To put that into perspective, this level of profit-taking has already surpassed what we saw at the peaks of the 2013 and 2021 bull runs, and it's nearly on par with the 2017 top. In each of those 3 instances, Bitcoin went on to experience a vicious drawdown in the range of 75% to 85%. So on one side, we have Bitcoin treasury companies buying at an unprecedented pace, positioning for much more upside. But on the other side, long-term Bitcoin holders are locking in profits at levels that have historically marked major bull run tops. One of these groups is going to end up being terribly wrong. Either Bitcoin goes on a melt-up from here, validating the treasury buyers, or it rolls over into a deep correction, proving long-term holders right. In order to evaluate which one has a higher probability of playing out, we have to look at 2 key market forces that significantly influence Bitcoin's price. By the way, don't miss out on the massive discount we're currently doing on our service for our 5th birthday. This is our biggest sale of the year, where you get access to every trade we take in real time and our complete crypto trading strategy at this ridiculously cheap price. In just the past year, our crypto trades have delivered some incredible returns, including a 30% profit on Bitcoin, 36% on Solana, and even an 83% gain on Ethereum, all while keeping most of our losses limited to around 5%. We don't do such discounts often, so make sure to capitalize on it using the link below. The first major factor we need to consider for Bitcoin is the US stock market. Since bottoming in April this year, equities have rallied by almost 40%. Now, if we put Bitcoin's price on top, we see that for most of this bull run since late 2022, Bitcoin has been closely correlated to the stock market. But recently, we've started to see a divergence build. While equities continue to make new highs, Bitcoin has been lagging behind. This divergence doesn't give us a definitive answer on its own, but it does tell us that stock market investors remain confident about today's macro outlook, while Bitcoin hasn't yet reflected that same level of optimism. And if that's the case, Bitcoin could soon see a strong catch-up rally, like it did in late 2024 right here. Now, it could be that stocks see some short-term cooling off after such a powerful rally, potentially causing Bitcoin to correct as low as $100,000. $20,000. But with the Fed now easing monetary policy without an imminent recession, the odds still favor more upside in the coming months. This chart shows us how the US stock market has performed across different timeframes when the Fed cuts interest rates, with the market sitting within 2% of its all-time highs, just like we saw happen this month. Since 1980, this scenario has occurred a total of 22 times. Looking out 1 month, we see there's a 50-50 chance of stocks being higher or lower, so no better than a coin flip. But when we extend the time horizon out 3 to 12 months, stocks have been higher over 70% of the time. Of course, these are just probabilities, not guarantees. But as traders, our job is to assess the odds and position ourselves to profit when the probabilities lean in our favor, while staying objective and flexible if those odds shift. So while short-term volatility is possible, the data for midterm still strongly favors more upside for the US stock market, which would be a strong tailwind for Bitcoin. That brings us to the second key factor for Bitcoin, the US dollar index, which has now fallen to levels we last saw in early 2022. This matters because Bitcoin is highly sensitive to liquidity conditions. When the dollar weakens, it effectively eases US liquidity conditions because it reduces funding stress, making it cheaper to borrow and freeing up capital that often flows into risk assets like Bitcoin. And the opposite also holds true. Since the start of 2025, the dollar has fallen by nearly 12%. And when we look back, every major decline in the US dollar has lined up with Bitcoin bull runs. In 2017, a sharp dollar decline coincided with Bitcoin's surge to $20,000. In 2020, the same dynamic played out again as the dollar fell, while Bitcoin surged to $60,000. Now, some will argue that the dollar has gotten extremely oversold here and is due for a bounce, which could trigger a sharp correction on Bitcoin, and that's a fair point, because no financial asset moves in a straight line. But if we zoom in on 2017, we see that the dollar had fallen by 11% in the first 9 months of the year. Then it saw a 4% bounce over the next 2 months. At first glance, you might expect that bounce to have triggered a pullback on Bitcoin, but instead, it lined up with the beginning of Bitcoin's parabolic ascent to $20,000. One possible explanation is that the bounce wasn't strong enough to really change the broader downtrend in the dollar. Liquidity conditions were still overall improving, and capital kept flowing into risk assets like Bitcoin. It was only when the dollar finally bottomed and reversed higher that Bitcoin topped out and entered into a bear market. It could be that we see something similar play out today. Because despite the possibility of a short-term bounce on the dollar, we're still of the opinion that it has room for more downside in an environment where the administration is trying to weaken the currency, and the Fed is easing policy without an imminent recession. When the Fed cuts interest rates, US yields fall relative to other countries, making dollars less attractive to hold. That puts downward pressure on the currency and eases US liquidity conditions. And it's not just the US dollar pointing to easier conditions. When we look at global liquidity, it has just hit new all-time highs after a brief consolidation. This is the same kind of backdrop we also saw during the 2017 bull run, right as Bitcoin went parabolic. So today, we have a combination of a strong stock market and a weak US dollar. This is a backdrop we've seen many times before throughout Bitcoin's history. At Bravo's research, we've built what we call our Bitcoin valuation model based on these two variables. This line here shows what Bitcoin's 6-month returns should look like based on the model. And this other line shows Bitcoin's actual 6-month return. Whenever the actual return goes far above the model, it's often signaled that Bitcoin was overvalued. And when the actual return has dropped significantly below, it's marked periods of undervaluation. Today, based on current macro conditions, the model suggests Bitcoin should have risen by around 150% over the past 6 months. But in reality, it's only up about 35% since March 2025. That's a massive divergence in expected versus actual performance. We've only seen a gap this wide 2 other times in the past decade, once in late 2020 and again in early 2023. If we put Bitcoin's price on top, we see that in both instances, it went on a major catch-up move shortly after. So it's quite possible that we're setting up for something similar right now, with Bitcoin positioned to rise aggressively from this undervalued spot. That's why we're not too concerned about the recent profit-taking spike from long-term holders, especially at a time when Bitcoin treasury companies are still buying aggressively. What this could mean is that we're witnessing a rotation in ownership, with coins moving out of the hands of long-term holders and into the balance sheets of billion-dollar corporations. And so far, the demand from these treasury buyers shows no signs of slowing down. Given that both the US stock market and and the dollar are signaling green today, and even our valuation model points to Bitcoin being significantly undervalued. To us, the setup starts to look less like a topping process and more like the groundwork for a potential melt-up heading into the end of 2025. And if that plays out, then this profit-taking chart could morph into something like this, potentially even surpassing the spike we saw in 2017. So rather than signaling an imminent top, we think this metric is suggesting that Bitcoin is in the latter stages of its bull market. By the way, make sure to take advantage of the discount that we're doing for our 5th birthday. There's a limited time remaining to secure our membership at a fraction of the price. You'll get access to our exact trading strategy step by step with real-time buy and sell alerts, portfolio updates, and premium videos. To secure your discount, use the link in the description below.